And good morning. It's Wednesday morning, 10:10 a.m. Eastern Time, July 27th. Jim Kingsland here with you with another market commentary. And we're looking at some weakness in the stock market today. No surprise, given the ongoing debt angst that's out there. There was also the weak durable goods orders numbers, and yet another economic signal of slowing down. The July durable goods orders came in down more than 2%, 2.5% actually, and that is worse than what the economists were expecting out of durable goods decline. And so stock futures, which were down about 3 points before the durable goods, dropped another couple of points after the durable goods, and we have opened lower. The Dow, after over 30 minutes of trading, 40 minutes of trading, is down 108 points, 12,393, and that, of course, does spoil things for the S&P 500, with the S&P 500 now in the 1315 range. So all this talk about nice support at 1330 to 1325 has gone by the wayside, at least for this morning, as stocks weaken. Now, while stocks are heading south, gold is going up. It's up by $7 at $1,623.90 the ounce. It had been as high as $1,628.80. It got a boost out of those weak durable goods numbers. Just the incredible dynamics that are at work here in terms of a weak economic picture, a fiscal house of disorder, just complete chaos in terms of coming up with a solution to spending cuts and tax increases and the whole nine yards to work out a debt ceiling increase. And so these metals are benefiting from all this uncertainty. Yes, there still is a flight to quality, ironically enough, into U.S. Treasuries. But the price of these metals continues to benefit from all of the shenanigans that are going on around the world. Silver is at $41.42 an ounce. It's up 72 cents, a 1.7% decline. So silver continues to bounce back nicely from the lows that we've seen recently, down around 32. And when do we get back up to 50 is the big question now that a lot of silver traders are asking, and they have been making some plans perhaps to see eventually once again a $50 handle or more on the price of silver. As for copper, it is a little bit lower today. It's down 2 cents at $4.45. The fundamentals for copper overall have been positive from a production standpoint. There's a strike in Chile, and so far the world economy has not tanked, but there is that threat, of course, of slower growth. But for now, copper holds up. Threat of slower growth is the excuse they're using to push the price of oil down. It's dropping by $1.65 to $97.95 per barrel. Yes, if the economy slows down, there would be smaller demand for crude oil. A couple of quick stock mentions. Boeing is green in a sea of red today. It's up $2 at $72.16 per share. It posted better than expected results. After falling over $20 yesterday, Netflix is now back to the $270 level, up $3.59. It had a little bit of positive news. It's working on something with CBS, where it's going to be expanding its reach into Central America and also into Canada with CBS programming. So while Netflix did post earnings that underwhelmed, a forecast that was disappointing, it's still not over there. It's Netflix. The daily battle goes on for those people that are trying to grow that company further, even though the damage has been done just a bit in terms of raising the subscriber fees and getting a whole bunch of angry customers. Now let's talk about CDS. Let's talk about the impact of what's going on in Washington. I'm still in the camp that they are not going to do a hard default. That there will be no type of default. And this is not just opinion on my part, but I do look at certain indicators in the market so that I have some clue other than my own thoughts. And all you have to do really is to look up the CDS market and what's going on there. And what's happening is that U.S. CDS credit default swaps have been rising. That's insurance, the cost of insurance. If you buy a whole bunch of U.S. debt, I mean, we're not talking about one savings bond, we're talking about $1 million plus transactions here. And those people are pricing in triple B right now, with the U.S. CDS up to around 72 basis points. I've seen some readings as high as 85. So they're pricing in triple B from triple A at some point. The downgrade may come one of these days. Who knows when, from whom? Will it be S&P or Moody's that pulls the trigger? Well, the CDS market is getting ready for it. Now, just to keep things in perspective here, a 70 area CDS, 70 basis point CDS, is nothing compared to what's going on in Europe, where in Portugal it's up to 955. It's at 295 in Italy. It was 2,000 in Greece. It's come down a little bit since then. Spanish at 338, and Ireland is at 885. They are really the basket cases in the world, those particular troubled countries there in Europe, and really all of them are having trouble. Banks are being downgraded in France, which is really kind of an indictment on the overall French financial outlook, and we've got to keep an eye on things in the UK and also in Germany. German bank results have not been spectacular as they have released earnings. So that's really the lay of the land this morning, that a credit downgrade is expected. They are not pricing in U.S. CDS at a D level for default. They're pricing in at triple B. Just look at those types of hard numbers. It's going to be interesting from the standpoint that a downgrade to triple B won't be the end of the world for the United States. After all, you look at a country like Japan, which lost its triple A years ago. Life continued there. Life continues. And so if they do a downgrade of U.S. debt, maybe the CDS market is overreacting a bit, and we still retain some kind of A rating, single A, or if perhaps Moody's and S&P are only in the mood to do a token decrease, they do a double A. It's still going to add well over $100 billion plus to the financing costs of the U.S. So for all the bickering and complaining and finger pointing that's going on down in Washington, and now this $2 trillion plan that Senator Harry Reid of the Democrats has put together, it'll all be negated by a lower credit rating. Nice job there, guys, down in Washington. It's going to neutralize any type of cutting. It is a farce, and it's one of the reasons why silver and gold remain one of the best places to be. Perhaps the Swiss franc. These particular investments are going to benefit from the chaos and disorder that is America's and also Europe's finances. So I'll just leave it there for today. Have a great day, and if there's any other sort of breaking news, or if there's a bigger decline in the stock market, I'll post something later. Perhaps the market will miraculously come back once again. The buy on the dip mentality is still deeply ingrained to Wall Street traders, and there's always that mysterious hand that lurks around in this market that manages to help bounce the market off the lows. You can never discount that possibility, but for the moment, it is a weak-looking stock market on this early Wednesday. Have a great day.